Hey everyone, happy Monday. Welcome back for another update. I am in a neighborhood in between showings today and not forgetting about giving my update. So here we are in the car. I think we're supposed to get some rain later. It doesn't look like it, but I'm hoping so. This has been such a great summer, full of rain here. Okay guys, well, I want to talk about how we might not be cooling off quite as quickly as we thought and some of the reasons that indicate that. But before I jump into all of that, thank you for watching every week. I appreciate all of you guys following this information. All of this comes from the Cromford Report, which is a subscription that I have specifically for realtors, and they delve into all of the MLS data and help us realtors understand what's going on in the market from an analytical standpoint so that we can share that with our clients. So that is the source of all of this awesome information, and I'm so appreciative of everything I get from them. And that I'm able to share it with all of you. And also, if this is interesting, make sure you subscribe to my channel. I do these updates every Monday, and I also post videos about living in Phoenix and neighborhood tours and all of those wonderful fun things. And sometimes my dogs are in the videos, but not today. All right, so let's talk about the CMI. I talk about this every week and I give you guys an update, and most of you are like CMI followers till the end, and I love your enthusiasm for it. So the CMI is the Cromford Market Index. It is a proprietary algorithm that they've created to help us understand supply and demand factors in our market. And this index is basically the reading between 90 to 110 means that we are in a balanced market where appreciation will go at the rate of inflation, and anything above 110 means that we are in a seller's market and appreciation will be higher than the rate of inflation, and anything below 90 is a buyer's market. So we have been in a seller's market. Our reading on the index has been well over 110 for a long time, but starting in February, we started to see a drop in that reading, and it's been coming down consistently week over week. However, it has kind of slowed down lately. So this week we're sitting at 351.5. Again, no reason to be concerned that we're going to a buyer's market or anything like that. 351.5 is still a seller's market by a lot. However, it was at 515 at the peak, so 351 feels like a pretty big drop. And 351 is a much slower decrease than what we had been seeing. So a couple weeks ago, we saw a decrease of like 50 points for the month, and then last week it was closer to about 30, and that's what this week is as well when we look at the last 4 weeks. So what I'm trying to say is the pace or the trajectory of how quickly the CMI is falling. So 351.5 definitely slowing down, and the reason the drop is slowing down is because our demand is increasing. So demand went up, and it's sitting at 7.9% or 7.9% above normal. That has gone up. We were around 105. That had been coming down for a long time. So demand is coming back up, which is interesting. And I don't know that we expected that. And our supply is still going up, which has been a new trend in the last few months, which is something that we very much need. Supply is sitting at 30.7, which means it's 70% below normal. So supply's been slightly increasing. Now we get this pretty big uptick in demand. By pretty big, I just mean we were kind of stable for a while, and then we jump up 2 points, almost 3 points. So that's kind of a big change from what we expected. So our overall CMI is starting to slow down on its downward trajectory because our demand has come up. And like I said, not really expecting that. Our listings under contract have increased as well. So traditionally, this time of year, we don't see a spike in listings under contract, which relates to our demand. And the last 2 weeks have increased, which is interesting. So that's kind of an unexpected peak or uptick in our listings under contract. And we're headed towards 2019 levels of listings under contract. And looking back to 2019, we were definitely in a seller's market, but it was just kind of a crazy seller's market, not an insane seller's market, which is where we've been recently. So now that we're kind of getting to these 2019 levels, that shows that we've started to decline a little bit or slow down a little bit in our market, but these listings under contract are increasing, which is going to likely show that our demand's going up and that everything from here is starting to get busy again. I don't know. We'll see what happens. We have 2 cities now that are both had an increase in their CMI over the last month, and for the last couple months, I haven't really had much to report on any CMIs increasing, which means that they're going further towards a seller's market. The 2 cities are Scottsdale and Cave Creek. So both of those started to move closer or, further into the seller's market instead of out of it, which is what everything else has been doing. So that's an interesting change. And we're starting to see a lot of these cities, when we look individually at their CMI, they're not diving down towards a balanced market. They're kind of coasting, and they're coasting towards the 2019 levels. So again, maybe we're not cooling off as quickly as we thought. Maybe we'll stay in a seller's market, but it's just going to be a less intense seller's market for the foreseeable future. I'm not sure, but I do know that the drops in the CMI and seeing this spike in listings under contract and seeing a spike in our demand when we weren't expecting it, and it's somewhat not unseasonal, if that's the right word to use. All of those things start to make us think that maybe we're not cooling off as quickly as we thought. I don't know if the CMI is going to hang around 351 for a while. We'll see next week how much it goes down over a week, if things start to change pretty drastically or not. But that's where we stand. So what is causing all of this? I have a few speculations. I don't have any direct answers, but I can speculate that interest rates might be one of the things causing this. They are low. I think they just dropped slightly again last week. So nothing has really changed much with interest rates in terms of going up. So that keeps our demand high. The summer's over. So, a lot of people took vacations and were very distracted with everything going on during the summer. And now we're kind of back to reality. Kids are back in school. And if you were planning on moving, buying or selling, you might be refocused on that goal now. And finally, I don't know, does COVID have something to do with this? Probably. It really impacted our market last year when things started to spike and get kind of crazy. So with an increase in cases and all of the talk going on and people fearing that there may be another lockdown, I don't know, are people thinking like, I should get this done before we get locked down again? Are people possibly trying to make the change in their life so if they are locked down, they're not stuck in a house that they don't like? I don't know. It's interesting to see the demand increase. So it could be for a number of reasons. Those are my speculations, not based on any fact whatsoever, just a personal opinion and a feeling. But that's it. So that's what's going on. So maybe we're not slowing down quite as quickly as we thought. We've seen some changes in the last week. We'll probably continue to see some changes. I will be keeping an eye on things for you. If there's anything drastic to report next week, believe me, I will be telling you about it. And I hope this just helps. I hope this helps you understand what's going on here in Phoenix. If you have specific questions and want to chat with me about those, feel free to reach out, call, text, or email, or check the link below or the description below. There's a link to set up a time to chat with me. So thanks for bearing with me in my car in between showings today. Have a great rest of your Monday, and I will be back on Friday with a neighborhood tour. See you then.